Good afternoon, everyone. I'd like to welcome you all to the Halftime Talk feature interview series. I'm delighted today to be joined by Dr. Nick Wayth, Chief Executive of the Energy Institute, who have just released their World Energy Statistical Review, which is reviewing 2024 energy trends, just to put it in a nutshell. But Dr. Nick, thanks so much for joining us. Looking forward to sort of having your learning about the key takeaways from that report that's just been released.
Great to be here this afternoon. Thank you for having me, Diala.
Great, great. Well, I mean, let's start by asking, what would you say was your top three takeaways, and were any of them a surprise to you as the report sort of came together? It's been a pretty volatile year, hasn't it? I mean,
It,
if you
it,
look at the
it
last
really
12 months.
has.
Yeah.
And first of all, let me just say very briefly, the Statistical Review of World Energy, this is the 74th edition. The first 71 of those editions were done by BP. And then for the last 3 years, the Energy Institute has been very proud to be the home of the Statistical Review of World Energy. So if we look back to 2024 and all of the data are last year's data, I guess, the big headlines are, firstly, a continued growth actually in all forms of energy. In 2024, we saw an all-time high in coal, oil, gas, renewables, nuclear, hydro. Every single form of energy reached an all-time high, taking overall energy demand up 2%, again, obviously to an all-time high. And with that, emissions grew 1% year on year, again to an all-time high. So, thus far, what we are seeing at a global level is an addition rather than a substitution. However, I mean, I think the second point I'd make is just the pace of renewables deployment just continues to, be pretty remarkable. 16% overall globally, but I think it's in China where really the action is happening. China once again added more renewables than the rest of the world put together. 47% growth in solar in just 1 year in China, which is very much part of the age of electrification. And overall, we saw electricity grow 4% globally, so roughly double the rate of overall energy demand growth. And I guess, I mean, all of this sort of underlines my sort of third and final point that this is going to be a messy, disorderly transition, and we're seeing some real contrast. In Europe and the US, we see emissions now continuing to decline, and that looks to be a sort of a secular kind of continual reduction in the use of fossil overall, and therefore reduced emissions. In China, we see everything growing, but notably with one exception, oil fell last year, and so potentially indicating that 2023 may have been a high watermark for oil demand in China. And then in other parts of the world, the growth very much driven by fossil. India, Indonesia, Malaysia, these are economies where we see the vast majority of growth coming from fossil. And so for us, this is a disorderly transition that isn't going to occur in a sort of smooth linear fashion.
No, not at all. I mean, in one part of your, at least in the summary of your report, the energy transition was described as chaotic, and it's not orderly, like you just said. And how much does that is that attributable to regional sort of differences? I mean, you mentioned China, accelerating its renewables production and use, but also its coal use hasn't really reduced, hasn't it? It's sort of, how is it marrying those two aims, I suppose? It is replacing oil with renewables, but it's still, obviously pumping away, not pumping away, but, coal is always a good base sort of provider, isn't it, for that? So,
Well, I mean, yes and no.
yeah.
So overall, in absolute terms, coal did grow in 2024 in China. But
Yeah.
actually, when you look at the power system, and just to give you a sense of China's electricity grid, China is adding the equivalent of two UKs each and every year. Over the last decade, it's added the equivalent of an entire US electrical grid onto its own grid. So this is a vast, vast grid that is growing incredibly fast. In fact, China is the most electrified of any major economy in the world, more energy goes to the end user in the form of electricity than any other major economy. But I think what's really notable this year is, so in 2023, around half of the year-on-year growth in Chinese electricity generation came from fossil. Last year,
Wow.
that was just 10%. Renewables, hydro, nuclear made up about 85%, with 10% coal and around 5% gas. So this is a system that is changing. And actually, although we've not sort of seen coal hit a plateau, it may well be, certainly in generation, that 2024 could have been an all-time high. We'll have to see what the numbers say this year in 25, but we are seeing a definite slowdown in the rate of that growth and of coal demand.
Yeah, that's quite a contrast, isn't it, from one year to the next? I mean, talking about grids and electrification, what about Europe? You know, we've had recently this year those sort of incidents in Spain, Portugal, where the system went down, if you like, and you know a lot of people attributing it too much reliance on renewables. But essentially, the lesson learned was that Europe's got to get a lot quicker in terms of connecting its grids, in terms of you know giving that more capacity. Do you think that was a lesson learned? Because of that, are we seeing what's the projection for that for Europe to power on? And of course, you've got the whole data center power demand that's just overtaking supply, isn't it, almost, if you look at as a global picture?
Yeah, so I think on Europe first, and look, I'm not going to get drawn into sort of the specific details around what happened in Spain,
No.
and it's a very complex conversation. But I think it has been sort of demonstrated from the initial findings that the penetration of renewables was not the key driver for that. I think one of the things we look at is battery storage, and that's continued
Yeah.
to grow over 100% year on year. I think one of the interesting relationships is looking at the relationship between renewable penetration and battery storage. And actually, one of the things you'll see is some quite different levels of sort of battery storage cover. Now, of course, batteries aren't the only answer. Pumped hydro plays into that. Interconnectors play into that. So it needs to be a resilient system is one that's diversified, that has lots of solutions to help balance the grid 24 hours a day. I think the other thing that's sort of worth just thinking about is, Europe has been in structural decline for several decades
Yeah.
around electricity, and we're now beginning to see that inflect and go back up. Part of that is being driven by data centers and AI, but actually a huge part of this is air conditioning. If you look globally, around 60% of the year-on-year changes are being driven by air conditioning. And of course, it's over 30 degrees where I am in the UK
Yeah.
today. We're getting to a place where the UK will begin to have air conditioning, and certainly for those living in other parts of the world, India, the first thing people want to get when they've got some disposable income is air conditioning. So I would be far more worried about the sort of continued rollout of air conditioning. I mean, data centers are material, and that growth is picking up. But overall, globally, I mean, I don't think it's sort of a game changer. Where it matters far more is sort of geographically. So, in those hotspots where data centers are being built in China, parts of the US, and indeed parts of Europe, those concentrations, the access to the
Yeah.
grid and providing reliable power 24/7, 365 to those data centers is a priority. But in my view, the sort of demand side of that is being somewhat overhyped. And actually, we shouldn't forget that AI has a huge role to play in the optimization of the electrical system itself.
No, no, absolutely. And where I sit in the Gulf, obviously, air conditioning is absolutely key. We've had 40 degrees for 2 months. And of course, here you've got the double whammy of power demand in the summer and we've got the desalination for our waters. So it is absolutely
And
critical.
it's worth flagging, by the way, just how much of that electricity remains driven by fossil in the Middle East. I mean, it's
Yeah.
something like 90% is coming from oil or gas primarily, and then oil. And actually, I looked at the year-on-year growth rates, and And actually, just the growth rate, year-on-year growth rate in gas demand was
Yeah.
sort of 5 times higher than the total installed capacity of solar. So a long way to go in terms of that renewable build out in the Middle East.
Absolutely. And the incentive for them is to do that, obviously. I mean, they can then free up a lot of their oil for export, can't they, as well? So that's kind of been quite sort of on Saudi's agenda. Part of the incentive of building up its and investing hugely in renewables has been, so in terms from a revenue point of view. Um, Dr. Nick, let's talk a bit about, I mean, a bit more macro, and sort of not to get into the geopolitics of it all. And of course, this is more recent, the last few months. I know, I realize your reports on 2024, but even looking, based on what the figures told you in 24 and your outlook for this year, of course, we've had some major sort of trade talk disruptions. I mean, we've had, Trump firing away with negotiations, let's say, that has perhaps impacted energy demand to an extent and shipping demand and fuel demand, etc. But how much, just generally speaking, would you say the uncertainty around globalization and future trade relations will cast on a report like this for 2025, let's say, when it
Yeah,
comes to
absolutely.
it?
It was a great way of framing the question. Look, I mean, geopolitics matters, to the global economy. It matters to the energy system. And we've seen that play out. I mean, we've seen constraints in supply chain. We're seeing increasing competition and sort of protectionism around access to the extraction and the processing of critical minerals. And I think, that will become an
Yeah.
increasing problem. We're seeing supply chain issues around gas turbines. I mean, trying to get a gas turbine, trying to, place an order for a transformer. These wait lists now are years rather than months. Yeah, some of that is just supply chains, but some of that is geopolitics playing in. But I think fundamentally, the economics are what's going to drive the global energy system. So, yes, offshore wind has got a lot more challenging in the United States, but will still continue. And I think there are positive signs it will. And fundamentally, states like Texas, where, they're the biggest producer in the US of hydrocarbons, but they're also the biggest producers of wind and solar. And that is driven by the fundamentals, not politics. And so I think, of course, the global instability is not helpful for long-term investments. But ultimately, I think it's the fundamental economic and physical and thermodynamic properties that are going to drive the energy transition.
Yeah, absolutely. What do you make of certain, I mean, countries are still committed, and of course, a lot of companies, and especially national oil companies, are committing to transitionary investments as well. But what do you make of this year, the sort of withdrawal, let's say, of commitment from Shell, the likes of Shell, BP, to offshore wind, to some other transition sort of technology investments back in favor of conventionals and thinking of the bottom line. Is that a risk for the transition as we go forward, or just a blip, perhaps?
I think, I mean, these things are not insignificant. However, I think ultimately the capital flows are continuing. So in 2024, we saw $2 trillion going into transition type investments and about 1 trillion going into conventional oil and gas. So that capital continues to flow. I guess the question is, which companies, which organizations are best placed to deploy that capital
Mm,
effectively and efficiently. And I think what's clear is there has been a structural disconnect between the needs and the wants of investors of some of those companies and the characteristics of different forms. I mean, the reality is that the investment profile of commodities like coal, oil, and gas is very different to that of electrons. The business model is very different. I mean, effectively, renewables are an infrastructure business, not a commodities
yeah.
business. And so it takes a different mindset. But all of that said, some of those companies you referenced are still making really big, significant investments. They may have sort of moderated and got a bit more focused, but they are continuing in more specific areas of the transition. I think so.
Yeah.
I think it's a little bit horses for courses.
Yeah, and I mean, and there has been some people who've commented that actually it should be left up to, as you said, the, other types of specialties to focus on solar and wind, and not, not the likes of BP or shall they should be focusing on, more sort of fuel, I suppose, fuel-based, perhaps cleaner fuel, things like carbon capture, etc., where they can deploy that expertise and experience. Now, let's talk a bit about gas, because that is the transition fuel, has been dubbed so for many years now. And but what do you think the future of that? I mean, if you just look at LNG, that's been a huge investment in that, obviously, the last few years by various countries, whether it's the US, perhaps some retraction from the likes of Australia. But you got sort of the medium to long term supply chain. The medium term supply chain, I should say, is plentiful. But what about long term? Do you see that continuing to be, committed to, if you like, or will even cleaner fuel options overtake at some point? How long do you say we would sort of have gas as the transition fuel, and how long will we have to depend on that?
Well, we saw last year, gas did have somewhat of a bounce back. It was the fastest growing fossil fuel, growing about 2.5%. Both coal and oil grew by less than 1% globally last year. And actually, we saw an uptick of gas demand in Europe as well. So it's sort of a global phenomena. And in LNG, the US still, for the second consecutive year, remained the largest
Yeah.
exporter of LNG. So look, there's no doubt that gas is playing an increasingly important role, particularly relative to other fossil fuels. So if you look at the United States, for example, effectively coal has been squeezed between gas and renewables, but the US economy is still 40% dependent on gas. That's the scale of it in the US. In sort of the Middle East, 60-70% of all power generation is coming from gas. So it is a huge driver. I'm not going to give a forecast. There are many forecasts out there. I think the thing I would sort of highlight is that gas, perhaps more than any other sort of fossil fuel, seems to have a wider range of uncertainty. If you look at
Yeah.
sort of the bull case for gas versus the bear case, and how ambitious sort of the net zero trajectory that you're on. There's a really big variation with some forecasts showing gas grows out to 2050, others showing a sharp decline in gas. I mean, the two other points I'd make is, it is absolutely crucial for the gas industry to improve its performance around methane emissions and flaring, and both of those increased in absolute terms in 2024. And I think, that is the Achilles heel of gas, is dealing with those, particularly fugitive methane emissions, which, as you know, and your audience know, has a far higher greenhouse gas equivalent warming effect than just
Yeah.
CO2.
And that's despite the commitments made at the COP meeting here in the UAE a couple of years ago, that, the sort
And
of
so
victory on finally methane, the elephant in the room that was, that's
that
the
that,
easy,
that
that's
needs to be a priority, because I
yeah.
think that will at some point become the Achilles heel of gas, and public
Yeah.
will push back on it. I think the other thing is in terms of sort of a molecule transition. I know there's talk about hydrogen, about ammonia. I remain somewhat skeptical of the notion of sort of hydrogen tankers going around the world, replacing LNG,
Yeah.
liquefied hydrogen, or some form of hydrogen. I think the economics around that are pretty challenging. The thermodynamics are not working in your favor on that. So it remains to be seen whether whether this gas continues for longer than some people would like. But whilst that gas is displacing coal, that net is bringing the overall sort of intensity of fossil down. And we do see that coming through the numbers. That
What about the affordability of gas, in Asia and in developing economies, and I mean, even developed economies, the likes of Japan, etc., which are very reliant on LNG. I mean, but let's focus on the poorer sort of strata of the big consuming countries. Or the developing countries in Southeast Asia, for example. I mean, again, affordability does come into it, doesn't it? From a gas point.
Absolutely. And that's exactly what we saw in 2022. So now going back
Yeah.
2 years worth of data, when in the Russian invasion of Ukraine, Europe was able to basically backfill most of its gas demand, but at a huge financial cost. But as that gas was sucked from the rest of the world into Europe, the markets which would have otherwise consumed that gas saw an uptick in coal. And so, until there's greater stability around gas pricing, we'll see this switching to coal because ultimately those economies need energy. And whilst renewables may be growing fast, just the rate of
Yeah.
the overall demand in energy is ahead of the pace that renewables are currently being deployed in countries like India and elsewhere.
And what about Russian gas into Europe? Because, of course, because of the Ukraine Russia war, that pipeline gas has been restricted. There's still some coming through, but and many people saying again, I mean, even for Europe's affordability, developed economies there, if that ends up being a cheaper option when gas prices might spike, then they will turn back to Russian gas if obviously politics allowing. Do you think that Europe is, I mean, they're planning to phase out, aren't they, intake of Russian energy in the next couple of years? I mean, do you think that's really realistic given
Well,
options?
no, I mean, as I already mentioned, there was an uptick in gas in Europe last year overall. That wasn't actually in the power system. That was for heating and industrial use. So we've seen a continual decline in gas in the grid, and I suspect that trajectory will continue. Obviously, well, two points. I mean, firstly, there are pretty significant annual variations according to how cold winter is in Europe.
Yeah.
But the second point, of course, is just the cost of energy in Europe is meaning that many sort of industrials are struggling to compete. And so that's leading to a sort of a deindustrialization of a lot of European businesses. And so this drive towards more competitive, lower cost energy is going to be absolutely critical. But yeah, all of that said, Russian exports of LNG into Europe did increase last year. So we are seeing more Russian gas finding its way into Europe.
And I mean, do you just sticking just to the gas theme? We've got the Canada US again, tariff negotiation, and of course, there's the reliance there on both sides, isn't there, on energy on each other? Not much disruption, obviously, seen yet so far. Many people saying it won't happen because it's just far too important for both sides. But is that something that the industry looks at with any concern, or it'll work itself out? I mean, we're not going to see too much disruption on that front.
Well, I mean, sometimes, I mean, people have this notion of energy independence, and there's a sort of net balance at which a country like the US becomes, energy independent and actually is sort of exporting more than it's importing. But even if you reach that point where on a sort of net basis you are an energy exporter, the reality is there are still cross-border trade flows through pipes, through LNG cargoes, through tankers that are ensuring that the system is optimized and that the right crudes are going to the right refineries. So this notion that you can draw a line around any one country and say we're energy independent, I think is a bit of a myth. But I think what is important is that we're able to continue to sort of see those trade flows continue. And look, I'm not a political expert, so probably not for me to make too much
Yeah.
comment other than that. That doesn't seem to be a sort of a huge priority of the US at this time to sort of
No, no. What
continue
would you
this.
say? What would you say, Dr. Nick, are the biggest? I mean, let's just look forward a bit, 2, 3 years. What would you identify as, again, the sort of top two risks to the global energy system? In the most immediate sense. We've got obviously the world trying to transition, trying to take care of climate challenges, and we've got this soaring demand that you just described for last year. What would be the biggest sort of risk, the two top risks for the system in the next few years to really try and avoid?
Well, I mean, there's a couple here. I think the first point is around that security of supply, and just a few days ago, oil price spiked on the instability that was taking place in the Middle East, and we know that 20% of global oil supply flows through a very narrow strait that has been under attack previously. And so, yeah, there is a vulnerability in the global energy supply system of those sort of, single point failures that could take out, a huge volume of global supply of oil. And we've already talked about Russian gas. And so that those big dislocations that suddenly create another price shock that have all sorts of impacts on inflation and everything that we saw on the back of Russia's invasion of Ukraine in
Yeah.
22. I think the second thing we're beginning to see is more impact from climate itself on the energy system. The vulnerability of the global energy system to climate change related events, flooding, hurricanes, extreme heat, that is beginning to have an impact on the energy system. in every aspect, the resilience of infrastructure, as we saw a few weeks ago in Spain, but also, just the generation capacity of wind and hydro as weather patterns change. That is beginning to have more year-on-year effects regionally. And we see that play out for hydro, that although it grew overall globally last year, every year there are big swings between where, hydro has a good year and where it has a bad year.
Yeah, I mean it's chicken and egg, isn't it? Because you've got to you're trying to transition, and if you ignore that and ignore the climate change, then you're going to end up with a bigger problem. Dr. Nick, one more question to you before we wrap up. Just in terms of supply of oil, we've got obviously the OPEC. I don't know, again, not to get into the sort of the OPEC politics, but we've got it's been a year of plentiful supply. Yes, we have tightness at the moment, short term, but there's been an oversupply in the last year or two. Some people arguing we're reaching peak demand on oil, and hence why a lot of NOCs are pumping, to the hilt. But we've also got non-OPEC supply. We've got the US that's been obviously, it's plateaued now, but obviously a huge increase there in the last few years, and other non-OPEC producers like Brazil and Guyana. Do you feel we're going to have an abundance of oil over the next 10 years? I mean, any chance that we'll have a shortage, or again, does the supply situation look pretty secure?
Well, I think, first of all, just the scale of growth we've seen in the US is like very little else we've seen. 2024, the US breached 20 million barrels a day for the first time. The combined output of Saudi Arabia and Russia, which is,
Yeah.
a really significant number. I suspect that may have been a high watermark for the US, despite sort of political rhetoric, capital discipline of those companies, and of course, ever increasing or decreasing reservoir performance is going to ultimately limit that US production figure. But I think what we're beginning to see are the indications of a peak in demand. I'm not saying definitively whether 2023 was a peak year, but it's notable that demand fell in China, and when demand consistently falls in China, remember it goes up quite slowly as the penetration of EVs has begun to eat into demand, and other alternative technologies have begun to take some demand away from China. But the other side of that may be sharper. Now, we've still got insatiable demand for crude in growing economies like India, and where I was a few weeks ago in Southeast Asia. So the question is which goes faster. But I have no doubt we are going to see a global peak in crude oil, within this decade. And the question really is not so much whether it's, whether it happens in any given year. I think it's the shape of the curve after it hits that peak. Is it a gradual, very slow sort of plateauing decline, or is it a much sharper decline?
Dr. Nick Wayth, Chief Executive of the Energy Institute, thanks so much for joining us today on Halftime Talk. It's been great to get your insights on the most recent report, and look forward to the next one.
My pleasure. Lovely to see you.